Hello and welcome everyone. Thank you for joining me today for this presentation on global economic trends and market analysis. The global economy is always changing, influenced by factors like technology, politics, demographics, and unexpected events such as pandemics. In this session, we will explore the big picture, looking at current economic patterns and how we use real data to analyze markets. By the end of this presentation, you will better understand the forces shaping global markets and how governments, businesses, and financial institutions respond to those changes. So here's a brief look at what we will be covering today. We will start with an introduction to global economic trends, then we'll move to the key aspects of the EU economy and global institutions like the IMF, World Bank, and World Trade Organization. We will examine critical economic indicators such as GDP and inflation. We will also look at how market analysts use data from these institutions to forecast trends and support decision making. Toward the end, I will outline a real world activity for economic analysis, and finally, we will wrap up with a few conclusions. So, as for the introduction, let's begin by understanding what global economic trends are. These are the broad long term changes in the global economy, patterns that unfold over years and affect nearly every country. They are driven by a mix of political events, social changes, financial systems, and technology. Some of the biggest drivers today include rapid technological process um, or the progressive in everyday life, shifting trade policies, demographic changes like aging populations, political stability or instability, climate change, and major global health events like the COVID 19 pandemic. These trends help shape how economies grow, interact, and prepare for the future. For investors, governments, and companies, tracking these patterns is essential for making smart, informed decisions. So, let's talk about the European Union economic trends. So, the EU is one of the world's largest economic regions, but its growth is not the same across all member states. Northern and Western countries tend to perform better, with strong economies and lower unemployment, and Southern countries like Greece, for example, or Italy often face more economic challenges, including high youth unemployment and sluggish recovery. Other ongoing issues include the long term effects of Brexit on trade and mobility, the need to integrate new member states, and the overall impact of inflation and demographic shifts. We could say that the EU is responding to these challenges with large scale programs like Next Generation EU, which aims to support recovery, innovation, and sustainability in member states. Continuing further onto the World Bank economic trends, so the World Bank global, so the World Bank's global perspective emphasizes the importance of emerging and developing economies in Asia, Africa, and Latin America. These regions are now key engines of global growth, yet they also face significant challenges, particularly high debt levels, poverty, and infrastructure gaps. In response, the World Bank is promoting sustainable development projects, supporting debt relief efforts, and encouraging investment in clean energy, education, and healthcare mainly. The bank's goal is not just growth but also to reduce inequality and improve resilience in vulnerable economies. That's go back to the EU economic trends. Um, so, a recent European Parliament report highlights some important economic developments in the EU. That report it focuses mainly on the post-pandemic recovery, which has been uneven across regions, the EU digital transformation, which is reshaping its economic structure, and the role of the EU in international trade, particularly through its commitment to the European Green Deal. This shift towards sustainability and digitalization shows how the EU is preparing for long term economic resilience despite short term difficulties. So, at the end, for this part, we could say that the main conclusions from the EU section, as we were talking, is that Europe's economic growth is expected to be slower than the global average. To address this, EU policy makers are prioritizing innovation, green energy investment, and digital infrastructure. These focus areas are expected to drive future growth while also helping Europe meet its climate and sustainability goals. So it's not just about recovering, it's about evolving mainly. So, as for the policy implications, we can see that policymakers should focus on innovation, digitalization, and green investments to sustain long term growth. As for the financial systems and regulatory bodies, we can say that financial systems are what keep economies running. They involve the movement of capital, credit, and investments through banks, markets, and institutions. To ensure sustainability and fairness, regulatory bodies are essential. And those bodies, you can assume who they are. So they include the International Monetary Fund, IMF, the World Bank, the other one is the World Trade Organization, and central banks like ECB and the Federal Reserve. These institutions monitor the financial system, provide assistance in times of crisis, and support global cooperation. They help keep economies functioning even during uncertainty or different recessions. Let's talk about the International Monetary Fund (IMF) mission in general. So the IMF mission is centered around ensuring global financial stability. It does this by monitoring economic developments, offering loans and financial support to countries in crisis, and promoting cooperation among countries, especially around exchange rates and monetary policy. The IMF often steps in when countries face serious challenges, so in this case, helping them recover and reform their economies. So, mainly, it aims to promote international monetary cooperation and exchange rate stability. Functions of the IMF, as you can see also in the slide. Um, the IMF has three key functions. economic surveillance, financial assistance, and technical assistance. So about the economic surveillance, what we mean about this is that it keeps track of economic health around the world and advises governments on fiscal and monetary policy. The second one, financial assistance, we could say that in this case it provides loans to countries experiencing balance of payment crisis, helping them stabilize their economies. Let's continue further on to the technical assistance. The IMF supports member countries by strengthening their financial institutions and policies. These functions are designed to promote global economic security and cooperation. So, the IMF technical assistance includes providing training and tools to improve national financial systems. This includes better tax administration, efficient budgeting, and effective debt management. Its role is particularly critical during a global financial crisis. For example, during the 2008 crisis and the COVID-19 pandemic, the IMF helped coordinate emergency responses and provided financial support to vulnerable countries. Let's talk a bit about the World Bank. So, the World Bank mission and or the core goal is to reduce poverty through investment and sustainable development. As we said, it provides loans, grants, and technical assistance to developing countries. So it focuses on long-term projects, including infrastructure development such as roads, energy, water, and so on. And the others could be education and healthcare programs and environmental protection initiatives. A notable project that we could mention is the International Development Association, which provides financial aid to the world's poorest countries. The bank's work is key in helping countries achieve stability and growth over time. World Trade Organization. So, the World Trade Organization governs international trade rules and aims to promote free trade by facilitating negotiations and resolving disputes. So, the World Trade Organization oversees international trade by creating and enforcing rules that ensure fairness and transparency. Its main roles are facilitating trade negotiations between countries, setting disputes when trade conflicts occur, and monitoring global trade policies to promote compliance. The World Trade Organization helps prevent trade wars and supports open, predictable markets that benefit both producers and consumers worldwide. About the key economic indicators, we have GDP, which is the total value of goods and services produced within a country's borders. It is the primary indicator of the economic health. This metric influences investment, policy decisions, and how confident consumers and businesses feel about the economy. The impact on global markets that the GDP has is that high GDP growth indicates a growing economy, attracting investment. Decline in GDP may signal economic contraction, leading to reduced global demand. key economic indicators. So the two other key indicators, on the other hand, are inflation and trade balances. So the inflation is the rate at which the general price level of goods, so it's the price level of goods and services rises, eroding purchasing power. High inflation erodes purchasing power and often leads central banks like the ECB to raise interest rates to keep it in check. The global impact that the inflation has is that it affects interest rates, currency value, and consumer behavior. And the ECB rates is to control inflation. About the trade balances, as a definition about the trade balances, we could say that is the difference between a country's exports and imports. A trade surplus occurs when exports exceed imports, and a deficit when the opposite is true. The global implications that we have from the trade balances is that a trade surplus can strengthen a country's currency, while a deficit may lead to borrowing or currency devaluation. Market analysis report. So this is real world data. So market analysts use real-time data from institutions like the IMF, World Bank, and ECB. Reports like the IMF Global Economic Outlook or the World Bank's annual development reports offer deep insights into economic growth forecasts, risks and opportunities, and financial stability. This data, we could say that it helps shape investment decisions, public policy, and corporate strategy. If we use data for these market analysis, market analysts you can use these from institutions to assess the health of economies, predict future trends, and recommend strategies for investors and policymakers, which is very important for the economy to function well. Let's continue on to the resources for market analysis data. So the market analysis today relies heavily on data analytics tools like the Sigma computing, which allows users to analyze massive data sets and extract meaningful insights. These tools are used to create predictive models, track economic indicators, and generate market forecasts. An example of this is that Sigma computing helps businesses analyze economic indicators, identify trends, and make informed decisions based on real-time data. And platforms such as this one, like Sigma computing, allow users to analyze huge data sets, spot economic trends, and create predictive models for future performance. For example, businesses can monitor consumer spending, inflation, and trade balances all in real time, and at the same time respond to changes quickly. So the indicator analysis activity overview. So here's a practical application of what we learned in this activity. You would form groups, choose a country, and analyze its economy using real data from the IMF, World Bank, or ECB in order to understand it better. So the groups will be assigned countries and tasked with analyzing key economic indicators that we just mentioned using the data from all these important institutions. Teams will generate a market analysis report that assesses current economic conditions and provides forecasts. The objectives of this activity are to mainly develop critical thinking in interpreting economic data, learn how to prepare market reports using real world data sets and huge ones, so present findings to the class and discussing the implications for global markets. So, continuing further to almost the end of this presentation, we can make a summary of the key points. So, global economic trends. We could say that economic growth, inflation, and trade imbalances are key drivers of global trends. Financial systems and regulatory bodies that we just talked about, institutions like the IMF, World Bank, or the World Trade Organization, play critical roles in maintaining global economic stability. So, as a conclusion, we could say that global economic trends are driven by factors like demographics, trade, technology, and climate. The EU and other regions face complex challenges but are investing continually in innovation and sustainability. Institutions, as I said, like the IMF, World Bank, and the World Trade Organization help keep the global system stable. And with the right data, we can analyze economies and predict changes, and also lead to the making better decisions. So, thank you so much for your attention and interest. I really hope that this presentation helped make global economic trends more clear and accessible. Thank you. So, as we know, we have discussed about the topic of global economic trends and market analysis. And now let's dive deeper into an extended example and let's see how we can better understand these topics. So the example for this one is how the Ukraine conflict and COVID-19 reshaped global wheat markets. Now, let's zoom out from personal finance to the global stage and look at an issue that affected millions of people, and that is the sudden surge in wheat prices during and after the Ukraine war and the COVID-19 pandemic. This example combines geopolitics, health crisis, supply chains, and market analysis, and shows us how global economic trends have very real, sometimes painful, consequences in our everyday life. To begin, we need to understand the context first. So, the Ukraine and Russia together are two of the largest wheat exporters in the world. In fact, they account for nearly 30% of global wheat exports. Countries in the Middle East, North Africa, and parts of Asia like Egypt, Lebanon, and Bangladesh are highly dependent on wheat imports from this region. And when the war broke out in 2022, wheat shipments from Ukraine dropped sharply due to closed ports, sanctions, and destroyed infrastructure. So, in this case, and these all the situation created a massive supply shock. It means that fewer goods were available, especially in a market where food security is already a sensitive issue. And now combine this with the aftermath of COVID-19. The pandemic had already disrupted global supply chains, as for example, slowing down shipping, reducing labor forces, and increasing transport costs. So, when the war began, it wasn't just an isolated event, it layered on an already a bigger, fragile system. This is where we see the interconnection of global trends such as a health crisis, a war, and climate related droughts um, in other grain producing countries all collided to create a global food crisis. As a result, wheat prices soared. This isn't just a statistic. In real life, families in Lebanon saw bread prices triple, and governments in North Africa faced riots and food protests. In response, for example, the organizations like the IMF and World Bank issued emergency financing to help vulnerable countries stabilize their economies. They also revised GDP growth forecasts downward for food importing countries, predicting inflation spikes, reduced consumer spending, and slower recovery. From a market analysis perspective, this was a moment of intense activity. Um, we could say that analysts and policymakers turned to real world data from the IMF, ECB, and World Bank to assess the situation. And in such cases, using tools like Sigma computing and others, economists track changes in trade balances, noting that wheat exporting countries like the US and Canada were seeing trade surpluses, while importers were forced to borrow more, increasing their national debt. Inflation data was monitored closely, especially in countries where food makes up a large share of household spending. Another trend that emerged was currency fluctuation. As wheat importing countries scrambled to buy more, their currencies weakened, especially if they relied on dollars or euros for trade. And this further increased the cost of imports, worsening the inflationary spiral. Central banks, on the other hand, were forced to raise interest rates to stabilize prices, even though that could slow down economic recovery. And again, a difficult trade off rooted in both monetary policy and global interdependence. So, this case shows how global economic trends aren't just theoretical. A war in Eastern Europe can drive up food prices in Africa. A virus in Asia, on the other hand, can collapse supply chains in Europe, and data from institutions like the IMF or World Bank become crucial not just for researchers but also as well for the politicians, investors, farmers, and everyday consumers. Um, Based on all that we said, we could say that market analysts must make sense of it all by using economic indicators like inflation, GDP, and trade balances to forecast outcomes. Also, advise governments and guide investment. So, as to share with you guys, and in short, this example reveals how volatile the global economy is, as we could see so far, and how essential is to understand the tools we have for navigating it, and how we should be very careful because it impacts the rest of the world. From food security to inflation, from war zones to trade policy, global economic analysis helps the world make sense of chaos and hopefully make better, more sustainable decisions. So, in this way, we can move forward. Thank you.